Aloha YouTube world, this is David Yansen again. Welcome back to another video that I have for you here. Today is July 27th. It's a Monday, 2020, and I am back in the green for the day. I did a video earlier this morning showing where I was and showing how the market was midday of for today, Monday, and talked a little bit about the hurricane that just missed the islands. I appreciate everybody who said something to me about glad you're safe, glad nothing bad happened, stuff like that. It's mainly family and friends. I think only one person said something here on YouTube, but anyway, I appreciate the gesture. So as you can see, I am back up over 1900. Last week was a bad week. I fell below 1900, which I was hoping by the end of the month I would be at 2000. And even though Robinhood isn't my main portfolio, and it is a portfolio mainly built on volatility, growth aggressive type companies, I would still like to see more growth than lack of growth. You know what I mean? Like, nobody actually likes to see this red all over the place, which is where I am at all time. As of June 13, 2019, I am down $31, which I still have. I made significant gains today because in my video ending last week, you saw I was down probably about half of that or so. So things were a little bit better today. As you can see, I was up 23, and in after hours trading now, I am up $7.51. So scrolling through the holdings really quick here, I highlighted Sony in the video earlier this morning. Something I forgot to mention about Sony is that the PE ratio is at 17, which is really good compared to a lot of companies. So, and for whatever reason, Sony is, in my opinion, kind of undervalued, because not just because of the PlayStation, but they make great headphones, they make great earbuds, they make TVs and DVD players. I don't know how much Blu-ray or DVD players are, if people are actually using those, because you stream Netflix, you stream Amazon, Disney Plus and stuff like that. So I still have DVDs, but I use them on my PlayStation 4. So Sony kind of undervalued, but the stock is very, very good for me, up 24%, $46, and today it ended up being up almost 4%. So, and they do have a really good PE ratio. They only pay annually the dividend, so that's the downside of it, but they do pay a dividend. I might add more to them in the next year or so, depending on how the price does. But I'm just kind of going to feel it out, because I got in at such a great price, and it doesn't pay that great of a dividend for me for my situation, for me to put a whole bunch more money into it. You know what I mean? So like, if it was in my M1 Finance portfolio, I have some companies, some holdings in there that justify the price that it is. McDonald's, if it's trading $200, they pay a great dividend. You put the money into McDonald's. You know what I mean? Not to mention it's a solid company. Same thing with I'm trying to think off the top of my head some other ones. Apple, trading almost $400. They don't pay a great dividend, but they pay a dividend. You're going to get ridiculous capital gains with it as well. They're a solid company, so you put the money into it too, and you're getting a worthwhile dividend from it. So, but Sony's just not one of those. So, and they only pay it annually. So no need to dump a bunch of money into it unless the price was to fall significantly. And for me, the price would basically have I at $63 or less, $63.75 or less, because that's what I bought in at. So, I don't know that will happen. Sony seems to come out with a new PlayStation about every 5 years, so maybe year 3 into this one, if they don't release another upgraded console, like the PlayStation 4, they released the PlayStation 4 Pro. So if they don't do a PlayStation 5 Pro, then the price might drop down again, because for some reason people don't really appreciate Sony. And I know the headphones, earbud space is very convoluted. The TV space, has tons of other companies, great companies in it as well. But or maybe it's just because in the US, when we think of Sony, I don't know. Because you would think in Japan they would do better. But when I was in Korea, Sony was everywhere. You couldn't walk through a store without seeing Sony products. And some of the products were like 10 years old, and they were selling super, super cheap. Of course, the exchange rate made it super cheap for me. But you just saw Sony stuff all over the place. So when you're in other countries, over in Asia and Southeast Asia, when I was in the Philippines, I saw Sony products all over the place too. So maybe it's just the US market doesn't buy a whole lot of Sony products, as far as headphones and televisions and things like that. So, but anyway, rounding out the portfolio for those that were in the green today, you can see Siri, which was my free stock from Robinhood when I signed up. So if you are looking for a brokerage to use, Robinhood is a very good one. You can do it for day trading. Not the best for day trading, webull is. I have links for Robinhood and webull in the description for you. You'll get one free stock when you sign up with Robinhood. You'll get 2 free stocks with webull. And some of these stocks from these companies, I think they say they're valued up to $1,000. So I ended up getting Siri, which is a solid company. They pay a dividend, and then I put $3.14 into it, and it's been pretty good to me. You can see I'm up 93%, $5.89. And Siri is a subscription-based company. So if you don't know about XM Sirius Radio, Google them, check them out. They've got good financials, and maybe they're down a little bit more now because people aren't commuting to work like they used to. So they are, because when I drove all the time, here in Honolulu, the traffic's really, really bad. I'm not a subscriber to Sirius XM Radio, but, I watch YouTube videos. I'm not necessarily watching them. I turn on the video and then I minimize it, and it's just the voice, of the video. And they're usually YouTube videos that I'm watching that I don't have to watch. It's mainly just the content that the person is giving is what I'm interested in. And so with SiriusXM Radio, you can get tons of podcasts, from all over the country, and any radio station, you can get all over the country. Here in Hawaii, we have all the military. So if they're from East Coast, West Coast, the Southeast, or Middle Plains, and they have their favorite DJs, with a SiriusXM Radio subscription, you can listen to your favorite DJ from whichever part of the country you're from. So they are a good company. Even though their stock price isn't very good, I was very happy with getting them as my free stock from Robinhood. Webull gave me GE, which I think is another good company too. Has had some really, really bad times really recently here. They've cut their dividend. They haven't suspended it, but they've cut it all the way down to a penny. I think it's 4 cents a year now that they're paying, but they do pay me a little bit, and that was free when I signed up with webull. And so you can do the same thing. Look in the description, sign up, get yourself a free stock. Even if you're using, one of the other big boys or your 401k, sign up just to get free stocks. That's kind of what I do. I kind of look for all these new apps that come out, because there are a ton of them now that give away free stocks just for signing up. So, and in the description, I have links for M1 Finance and SoFi Invest as well. So Lyft ended up being in the red, Uber in the red. Both of these have been hovering around this price. Not too much volatility with them. Both are projecting that they will be profitable come 2021. Starbucks has earnings report coming up. I'll do a video on that. I believe their earnings is Tuesday, tomorrow. Stag Industrial, great real estate investment trust. They pay me every single month. NEO, volatile as everybody knew it was going to be, but I am still up 163% because I got in at $4.45, which is crazy, crazy cheap. Probably the best value that I have bought into as far as a startup is concerned. Uber and Lyft haven't really done a whole lot for me, but NEO has done a lot for me as far as my gains. and what they potentially could do in the future. Seeing how they are a Chinese company, and they are, China's, got almost a billion people, and China is huge into EV. I mean, they are moving that way ridiculously fast. They have QR codes for buying stuff now. Like, they don't even really use credit cards anymore. Cash is almost extinct. So when it comes to tech, if you can find a decent company, and it's in China, or they're marketing in China like Tesla is, buy into it, because you're going to get great gains out of it. And right now, with the exception of some smaller knockoff type EV companies in China, it's basically Tesla number one, and NIO is a very, very distant second. But there might be just a duopoly in China between these two companies, because some of the other EV companies there, they're just not really, they're not, they're kind of cheaperly made, smaller vehicles, not a lot of flash, not a lot of design. And that's how I see the companies in the US. The Nissan Leaf looks like a regular other car. Kia, has an electric vehicle, looks like the same as the other ones, where Tesla comes out and it's this exotic design. And NIO is kind of like that too. Not quite as exotic as Tesla, but if there's a duopoly and it ends up in China and it's NIO and Tesla, then I will be doing very well, as I own a little bit of Tesla as well in my other portfolio. Facebook up today, Amazon up today. Both of these have earnings this week. I believe it's Thursday they will report the earnings. I expect Amazon to lose some. Not that they're a bad company. I just think that their earnings report will show a decrease in earnings. Facebook, I'm not sure how much they will be affected due to people not placing ads with them anymore. A lot of the big companies have reduced their advertising on Facebook. Pfizer, I believe they have earnings tomorrow or Wednesday of this week. I think that they will probably do well on news that, I know the stock has done well. I just bought one share at $36, which was high, because you can see it trading at 13 PE ratio, but they pay a great dividend. They are a solid company, but the U.S. government is asking them to make 1 million, or is it 100 million? I believe it's 100 million vaccines. So, and they are giving them that they are one of the companies that they're using to give the contract to make these vaccines. So, I don't know if their earnings will reflect that, but their stock price has definitely gone up with that. And I will look to add to them probably after this earnings report. Some flaky people might be, oh, well, their earnings report wasn't that great, so, the price goes down a little bit. Not sure. Nikola was a bad investment, but I'll just hold on to it now. I might as well. It's at $33. Shopify, great company. They report earnings this week as well, too. Part of the Internet of Things. Fastly, part of the Internet of Things. These three bio companies, this one is the worst of the three that I have invested in. Down 31% on this, almost 40%. And I just bought fractional shares. Most of this portfolio is fractional shares, because unless they're going to pay me a dividend, I don't really see the need to buy the full share. Why buy the full share and lose more money because it's a volatile company versus put $25 into it, and if it drops 30%, like this company right here, $6.81 is what I actually bought on it. So, but it was trading at 31.07. So, I've lost all that basically. But it's not that big of a blow to the wallet. But I do believe that you should have some aggressive growth stocks in your portfolio. Sorrento is doing very well for me. This bio company, antibody testing and vaccines, up almost 20%. And I got in super low on this one as well. And IBEO, doing good, but I just got this one because it was so cheap. I really didn't understand the company, and that's the worst way to buy into a company. Let me just tell you that right now, is really not to understand it. That's like rule number 2. Come up with a plan and then know what you're buying, as far as the rules of investing. But it was so cheap, I thought, I'll get 4 shares of it. It's bio, it's vaccines. That's the hot thing right now. I'm probably not going to lose out. and I'm down today, but I'm up 100%, so $10 I'm up. So it actually turned out pretty good for me. And lastly, Square might have hit its top when I bought my $26 worth of it, but you know, if it keeps growing $1 here, $1 there, which today is up $4.34, I'll be happy. And Square, Cash App, huge right now. So, and now for my watch list, British Petroleum, as they are leading, they are 1 or 2 in the United Kingdom for EV chargers. So they're not just petroleum and fuel and natural gas anymore. They are going aggressive electric car side as far as building chargers where people can pull up and plug in their car while they grocery shop or they're at work. So, and the PE ratio is really low compared to a lot of other companies. The dividend yield is crazy high, and that's just because gas in general has been having issues with Russia and Saudi Arabia and all these other countries, you know. So per barrel, I think it's like $40 or something like that, which is not good. But I think for the future they'll pull through, especially with their EV investment. So I just put them in my watch list just before I started this video. So I'm going to do a little bit more research on it in a little bit, and then I'll do a video if I decide to go ahead and pull the trigger. But at $23, it's trading way lower than some of the U.S. companies, and some of the U.S. companies, good Lord, haven't really started, they're not that aggressive on EV charging stations. So anyway, that's my portfolio for the day. Check out my other videos for my M1 Finance portfolio. I have more dividend focused companies there, long-term blue chip companies, and my M1 Finance accounts. Also, hit the notification bell. Don't forget to subscribe, like, share with your friends and family. I do appreciate it. Thanks for supporting my channel. I hope you have a great day. Aloha and mahalo.